So, a friend of mine dabbled in cryptocurrency trading recently, and he made the same mistake that the majority of new investors make, which is buying high and selling low. And the reason why he did this was because he didn't fully appreciate timeframes. So, I wanted to create a video for anyone who's thinking about getting started in trading, anyone who is new to trading, anyone who's considering getting involved so that you can try and protect yourself from making the same mistakes. So, this platform is called TradingView and is used by the majority of traders out there because it has lots of instruments with lots of data. So, you can see the historical movements of things like government bonds, the Nasdaq, the S&P 500, stocks like Apple, Tesla, Netflix, gold, silver, currency pairs like the US dollar against the Australian dollar, and cryptocurrencies. So the asset that this guy decided to trade was Solana. Now, to give him a little bit of credit, he did purchase it on Sunday, which was moments before a global stock market crash. So that would be this red candle here. So I can understand a little bit of fear and a little bit of panic setting in, but again, the primary reason is because he was looking at his phone every 5 minutes and he was seeing these wild fluctuations in the price and it freaked him out. But with a little bit of knowledge about how things move, and again, just understanding timeframes, this could have been easily avoided. And I just want to demonstrate that to you. So on a chart like this is a candlestick chart and it shows the following information. This is a weekly graph. So each one of these candles shows the movement of price over the course of 1 week. So Monday to Monday. And it has the following information. It has the price that the asset was when the week started. So that's 1 minute past midnight on the Monday morning. The price was $138. Throughout that week, over the course of 7 days, Solana hit $163.70. It also dropped to $110, and then it closed the week out at $158. So it opened at 138 and it closed at 158, so $20 up. But as you can see, during that week, it went up and it went down. So again, depending on what time frame you're looking at, this would have either made a quite significant crash or quite a significant gain. So if we choose one of these candlesticks at random, such as this big green one here, and we'll just analyze the price action over the course of that week. So I'm going to highlight the candles either side so that we can see what happened between those. And we're going to drop the time frame down to a 4-hour time frame. Zoom all the way out. And then we can see. So as we saw, that was a big green candle that occurred during that week, which is this one here. But you can also see that during that week, the price actually dropped from this high here to a low here of 11%. So if you've put $1,000 into this asset here, and you've been watching it every few minutes over the course of 12 hours, you've seen a $100 drop. You've got another one here as well from $186 down to $164, which is a 12% drop. So again, your $1,000 is $120 less if you're watching it. I mean, that's an 8-hour time period there, which is while you're asleep. So I understand that that could cause somebody to sell, but if you look again at the weekly chart, let's refresh that, you can see that this is rising and falling and rising and falling and rising and falling over the course of several weeks. So Understanding time frame is understanding that when a price goes up, then it's quite likely that 1, 2, 3, 4, 5 weeks later, it's going to go down again. And then 1, 2, 3, 4, 5 weeks later, it's going to go up. So if you're checking the price of anything over the course of 1 minute, then of course you are going to see these wild fluctuations from $157 to $163, 4% over the course of an hour, and drops of, 2%, 3% over the course of 2 hours. So understand your time frame. If you want to trade on the 1 minute time frame, at least have an understanding that you need to let things play out. Don't be checking it every single minute because you're going to see this whip soaring action, which is just going to stress you out and cause you to buy high and sell low. First things first, pick your time frame that you want to trade. Look at the patterns of how things move and understand that you need to let these things play out. So if you're going to look at a down, an up, and a down over the course of 2 weeks, and then another week, and then 2 weeks, and then another week, when you think that we've hit a high or when you think that you've hit a low and you want to take a trade, let the trade play out over that same time period, 1 week or 2 weeks. And if you can, if you're using a platform that allows a stop loss, consider doing that as well. A stop loss is an automatic trade that you can place. So if you put in $1,000 here or somewhere around here, thinking that it's going to go up, you can actually put a stop loss in place, which tells your exchange that, hey, if the price drops to here, it's going against my projections and I'm going to get out. So if you have managed to catch a low here, and it starts going against you, then you may be able to get out after a 15% loss or whatever risk tolerance you have. So I hope that helps. Cryptocurrency is very volatile. So you are going to get these highs, these lows, and a lot in between. So just factor that in. Unless you are a very, very experienced day trader who is watching things on the 1 minute time frame, then you need to be allowing plenty of time for these things to play out. I mean, the gap between this low and this high is what, 6, 7, 8 weeks. This high to this low, same again. Low to high, 4, 5, 6 weeks. So just appreciate that. Understand what kind of trader you are. Are you a short term or are you a long term trader? And then trade to those time frames. Don't be looking at a chart like this on the weekly, seeing it hitting a high, or rather seeing it hit a low, and then selling at a lower price just because it's dropped 5% over the course of 10 minutes, 20 minutes, half an hour. Give it the 3 or 4 weeks that it needs to get to where it needs to go. Okay, hope that helps.